Good morning, everyone. Welcome to the market opening bell for Monday, November 17th, your 10-minute guide to the stock market. The Hang Seng Index performed well from Monday to Thursday last week, rising for 4 straight days and briefly surpassing 27,000 points, with a high of 27,188 points on Thursday. However, hawkish remarks from Federal Reserve officials weighed on U.S. stocks and technology shares. On Friday, the Hang Seng Index opened 412 points lower at 26,660 points, falling below the 27,000 mark, and then fluctuated downward throughout the day, at one point dropping 537 points to a low of 26,535 points. It closed at 26,572 points, down 500 points or 1.8%, ending its 4-day winning streak. The X-share index fell 201 points or 2.1% to close at 9,397 points, while the Hang Seng Tech Index dropped 168 points or 2.8% to 5,812 points. Total market turnover for the day was 232.7 billion Hong Kong dollars. For the week overall, the Hang Seng Index still rose 331 points or 1.3%, marking its second consecutive weekly gain. The X-share index also gained for the second week in a row, up 1.4%. In contrast, the tech index declined for the first straight week, down 0.4%. Southbound funds net purchased 12.887 billion Hong Kong dollars worth of Hong Kong stocks. Among the top net buys were Alibaba with $2.257 billion, Tencent with $2.168 billion, SMIC with $804 million, Xiaomi with $611 million, and XPeng was with $467 million. The top net sales included the Tracker Fund with 6.227 billion, China Life with 261 million, PopMart with 236 million, and 3S Bao with 174 million. According to statistics, Southbound funds have net bought Xiaomi for 13 consecutive days, totaling 9.526 billion Hong Kong dollars, and Alibaba for 2 consecutive days, totaling 3.632 billion. From a technical perspective, the Hang Seng Index broke through the 27,000 level but failed to hold it, confirming yet another false breakout. The market is expected to remain in a range-bound pattern going forward, with short-term fluctuations likely between 26,200 and 27,200 points. On the mainland, the 3 major A-share indexes opened lower on Friday and trended downward. The Shanghai Composite Index ultimately fell below 4,000 points, closing at 3,990 points, down 39 points or 1%. The Shutdown Component Index closed at 13,216 points, down 260 points or 1.9%. And the Chinex Index closed at 3,111 points, down 90 points or 2.8%. Combined turnover on the Shanghai and Shenzhen markets was 1.958 trillion yuan. For the week, the Shanghai Composite fell nearly 0.2%. The Shenzhen Component dropped 1.4% and the Chinex declined 3%. The renminbi midpoint rate against the US dollar was adjusted upward by 40 points to 7.0825. Mainland China released its Troika economic data, showing a slight rebound in consumption but persistent weakness in investment. October industrial added value for large-scale enterprises grew 4.9% year-on-year, below the market's expected 5.5%. Fixed asset investment nationwide for the first 10 months fell 1.7% year-on-year, worse than the expected 0.8% decline. Real estate development investment for the same period dropped 14.7% year-on-year, widening from 13.9% decline in the first 9 months and worse than the expected 14.5% fall. Residential investment specifically fell 13.8%, expanding from the 12.9% drop in the first 9 months. On the positive side, October social retail sales grew 2.9% year-on-year, slightly better than the expected 2.8%. The nationwide urban surveyed unemployment rate in October was 5.1%, also marginally better than the anticipated 5.2%. JD.com announced its third quarter results, after which its share price fell over 6% on Monday. Management guided that JD retail revenue for the 2025 fiscal year will grow about 10%, with operating profit increasing nearly 20%. This implies that fourth quarter revenue and operating profit will decline approximately 5% and 23% year-on-year, respectively. The market originally expected fourth quarter JD retail revenue to grow about 5% and operating profit to rise around 10%. In the same group, JD Health continued strong growth in its third quarter, with both revenue and profit exceeding market expectations, driven mainly by robust sales in pharmaceuticals and nutraceuticals, deeper strategic partnerships, and expanded AI healthcare applications. Revenue for the period reached 17.12 billion yuan, up 28.7% year-on-year. Non-IFRS operating profit rose nearly 60% to 1.378 billion yuan. The stock rose 6.6%, making it the best performing blue chip stock. JD Logistics saw continued high revenue growth in the third quarter, but profit was slightly pressured by costs. Total revenue reached 55.1 billion yuan, up 24.1% year-on-year, and exceeding the market's expectation of 53 billion yuan. Net profit was 2.03 billion yuan, down 7.9% year-on-year, and the stock fell 3.9%. Bilibili reported third quarter net operating revenue of 7.69 billion yuan, up 5% year-on-year. Value-added services contributed about 3.02 billion yuan, up 7%. Advertising revenue was 2.57 billion yuan, up 23%, primarily due to improved ad product offerings and efficiency. Mobile game revenue was 1.51 billion yuan, down 17%, mainly because of a high base from the exclusively licensed game Three Kingdoms Strategy Edition. IP derivatives and other revenue was 582 million yuan, up 3%. Net profit was 470 million yuan compared to a loss of 79.515 million yuan in the same period last year. Adjusted net profit was 786 million yuan, up 233% year-on-year, and better than expected. Daily active users grew 9% year-on-year to 117 million. Monthly active users rose 8% to 378 million. Monthly paying users increased 17% to 35 million. Average daily time spent per user was 112 minutes, up 6 minutes year-on-year, and a new historical high. Although total revenue growth of 5% was slightly below expectations, high-margin businesses like advertising and value-added services performed strongly. Gross margin improved for the 13th consecutive quarter, and GAAP net profit turned positive from a loss last year, showing significant profitability improvement. However, the gaming business was a clear drag. Overall, Bilibili has fully transformed from a money-losing community to a high-margin commercialized platform, with advertising and premium memberships emerging as the new dual-growth engines. Reports indicate that NetEase open world martial arts game Where Winds Meet has launched globally on Steam, PlayStation, and Epic platforms. The overseas version attracted over 500,000 players within 40 minutes of launch and ranked in the top 5 on Steam's global hottest games list, with peak concurrent plays exceeding 140,000. Domestically, the game has surpassed 40 million players. According to foreign media, Sony Pictures has acquired the film and TV adaptation rights for Pop Mart's popular IP Labubu. The movie project is in the early stages, with no details yet on producers, directors, or whether it will be animated or live action. Pop Mart established a film studio in January and registered the copyright for the first season script of the animated series Labubu and Friends. Among today's new listings, CNGR Advanced Material, stock code 2579, closed at 33.5 Hong Kong dollars in Philip Mark's grey market on Friday. down 1.5% or $0.5 from the listing price. Excluding handling fees, each lot of 200 shares resulted in a paper loss of 100 Hong Kong dollars. With bargain hunting, US stocks rebounded from the lows on Friday. The fear gauge VIX fell 0.17 points or 0.9% to 19.83 points. The Dow dropped as much as 594 points to a low of 46,863 points and closed down 309 points or 0.7% at 47,147 points. The Nasdaq fluctuated sharply, falling 433 points at one point before turning positive by 202 points, ultimately closing up 30 points or 0.1% at 22,900 points, ending a three-day losing streak. The S&P 500 closed down 3 points at 6,734 points. The Nasdaq Golden Dragon China Index, reflecting Chinese ADRs, fell 129 points or 1.6% to 7,983 points. For the week, the Nasdaq fell 0.5%, while the S&P 500 and Dow rose 0.1% and 0.3% respectively. AI stocks rebounded with Nvidia up 1.8%, Oracle up 2.4% and Micron rising 4.2%. Large tech stocks had mixed performances. Microsoft rose over 1%, Tesla gained 0.6%, while Meta, Alphabet and Apple fell slightly and Amazon dropped 1.2%. Bitcoin briefly dipped below the $95,000 level, pulling cryptocurrency stocks lower, with major holder strategy down 4.2%. Berkshire Hathaway disclosed in its latest regulatory filing that as of the end of the third quarter, it had increased its stake in Alphabet to a value of $4.3 billion, making Alphabet its 10th largest holding. It also reduced its Apple holding by about 15% to $60.7 billion. However, Apple remained Berkshire's largest stock position as of September 30. According to Counterpoint Research, Apple's iPhone 17 series drove a 22% year-on-year increase in the company's smartphone sales in China during the first month after launch, with the iPhone 17 series accounting for nearly three-quarters of those sales. Counterpoint noted that the mid-week consumer demand China's overall smartphone market continued to soften, with third-quarter sales down 2.7% year-on-year. Looking ahead this week, investors will focus on Nvidia's earnings, and economic data will resume release following the end of the U.S. government shutdown, including the September non-farm payrolls report. Our stock pick today is Ascletis Pharma, stock code 1672. Ascletis Pharma's drug pipeline is mainly divided into three categories. One, metabolic disease pipeline, primarily focused on obesity treatment, emphasizing long-acting dosing and muscle preservation strategies. Products include ASC30, once daily oral tablet for obesity, ASC30 subcutaneous injection once monthly or less frequently for obesity, ASC47 subcutaneous injection once monthly or less frequently for obesity treatment without muscle loss. Two, immunology pipeline focused on IL-70 inhibitors targeting autoimmune diseases such as psoriasis. The main product is ASC50, an oral small molecule IL-17 inhibitor for psoriasis. Third, expanded indication pipeline targeting acne, MASH, etc. Products include ASC40 for moderate to severe acne, ASC40 for recurrent RGBM, ASC40 for MASH, ASC61 for solid tumors. The group has made good progress in its metabolic disease pipeline. ASC30 US Phase 1b trial showed plausible adjusted mean weight loss of up to 6.5% with good tolerability, no serious adverse events, and mild gastrointestinal side effects. A US Phase 2A trial has been initiated with enrollment of 125 subjects expected to complete in August 2025. Top-line data anticipated in Q4 2025. ASC30 injectable US phase 1B trial showed a single-dose half-life of 36 days, supporting monthly or less frequent dosing. Sterile solution suitable for combination therapy. US phase 2A trial has begun with first subject dosed. Enrollment expected to complete in 2025. Top-line data in Q1 2026. ASC 47 Australian phase 1B trial showed a half-life of up to 40 days, supporting monthly to bi-monthly dosing with good tolerability. No serious adverse events or increased heart rate. A US combination trial with semaglutide has been initiated, with enrollment of 28 subjects expected to complete in July 2025. Top-line data in 2025 preclinical DIO mouse studies showed that low-dose combination with semaglutide achieved 56.7% greater weight loss than semaglutide alone and restored muscle mass to healthy levels. ASC35 selected as a clinical development candidate on October 13, 2025, supporting monthly dosing. ASC36 selected as a clinical development candidate on October 30, 2025 for monotherapy in cardiometabolic diseases and combination therapy focused on obesity. On November 12, 2025, a stable co-formulation with ASC35 was announced, with no aggregation or precipitation due to fibrosis. An IND application to the US FDA is expected in Q2 2026. In early November, the group presented multiple obesity drug candidates, including ASC30 and the ASC31 plus ASC47 combination therapy via posters at Obesity Week 2025 in Atlanta, Georgia, USA, demonstrating continued strong progress in its small molecule and peptide obesity pipeline. Recommendation buy at 13 Hong Kong dollars. Initial target $14.5. Next target $15.2. Stop loss at $12.2. I do not personally hold the above stock.